Boy, that time flies when you're having fun. I think it's about that time of day again here, folks. It's Tuesday evening. It's February the 5th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help traders of all shapes and sizes earn consistent, reliable, predictable, dependable profits. And to do that, we use a simple 3-step trading strategy that we execute together every day in our trade room. But my job tonight is to make sure we know where the best opportunities are going to be setting up for tomorrow's trading session. That is a Wednesday morning. And of course, we're going to cover crude oil. We got some S&P, some Nasdaq, some gold, and the euro. You know, I'm jumping in here real quickly here into oil tonight. You know, oil is obviously bearish right now. Obviously get a big bear move down. It looks like this oil is starting to run into a bit of a range here. And of course, with a range, I always want to sell above the top of that range. I'm going to try to combine the high of that range along with the hidden channel here. I'm going to put that plan together for you guys in a moment to sell off the highs on oil here for tomorrow. How about that S&P? Boy, the S&P and the Nasdaq were just red hot in the pre-market, as you can see. But of course, we're starting to slow down a little bit here on the S&P. We get a double top. Of course, that tells me we got a trading range. That trading range is a big clue on the chart. But honestly, I think the biggest clue on this chart is a combination between this trend line and, more importantly, is that little tiny gap back there. That gap might just be the most important clue for tomorrow's session. I'm going to come back in a couple seconds here and we'll put the plan together for the S&P, and I'll show you why that gap is so important. Over to another market that appears to be a bit range bound tonight. Nasdaq was just on fire, right? Running hot and heavy. Got that two-legged pullback we talked about in last night's newsletter. But the bottom line, though, is anytime I see a double top, right, in a bull market, I always know I'm going to call this a range-bound market. Range-bound market, bull bias tells me I want to buy that dip tomorrow on the Nasdaq. But looky, oh, sorry about that. Looky, there's a little trend line coming down here. Something tells me that trend line might just be our secret weapon for Wednesday's trading session. We're going to break that down in a moment. Let's grab a look at gold, though, first here. How's gold doing right now? Oh, hold on. Okay, yes, it is still moving. It is still. I'm kidding with you, obviously, right? It does look like it looks like we got to do. It looks like we got a dead one here, right, on our hands, but that's not the case. It's just very slow here right now. Very slow session on gold, and you know why? We got a big speech later on tonight. I have a funny feeling that this little guy is waiting for the other little guy to speak later on tonight. We're going to talk about that in a moment. But the big, you know, all kidding aside here, though, on the gold, it does look like there's a very, what's the word? Almost flat, wide channel. Now, if you're a client of mine or if you watch my newsletter religiously, you know flat, wide channels tell me one thing, and we're going to break that one thing down in just a moment here on the gold. And then how about that euro? The euro has a little bit of that Humpty Dumpty syndrome going on, right? Where it kind of keeps on rolling down the stairs here right now. It's a spiking channel. Anytime we see a spiking channel, I always want to drill into those, right, original parts of a channel. And boy, when you combine that with that beautiful reversal line, and you know I love me some hidden channels. I really love this area just shy of that 15,000. I'd love to get it up and back down for tomorrow. Now, obviously, I'm going to go into a lot more detail on all of these markets. We're going to break down all of my big five here in just a few moments. Before we jump into the charts, though, and put the plan together for Wednesday's session, I want to make sure you never miss a video here at School of Trade. And to do that, head over to the blog at sidewaysmarkets.com. This is where all the action happens every day. And make sure you join our mailing list. All I need is your name and your email address, and then don't forget to hit that subscribe now button and then check your email, because in that inbox I'm going to send you a welcome email with all kinds of great stuff so you can make the most of our time together here, right, on our newsletter. So make sure you join our mailing list, right, and then again check your inbox, because I'm going to send you a welcome email with a bunch of good stuff there for you to help benefit your trading career. Also, don't forget, tomorrow morning We're going to be in our trade room, 8 o'clock Eastern time. If you can't be with us tomorrow in the trade room, the next best thing is grab those charts. There's a big button right below the video tonight on the blog. Slap that button, click the button, whatever you want to do to that button, right? Hit that button and download those charts. Have them ready for tomorrow. Again, I'll be with you tomorrow in the trade room, but if you can't be with me in the trade room tomorrow morning, next best thing is to grab those charts. And how about some questions? If you have any questions, comments, concerns, right? I love the feedback. I love to answer questions. Don't forget, that's what the comment section is for. So drop me some comments in the comment section. Let me know what you like, what you hate. Give me a thumbs up while you're down there, will you? And don't forget, right, you can always call that toll-free phone number in the upper right-hand corner. I've got live support up there as well. If you have any questions for me, don't be afraid to pick up the phone and call the office. I'm old school. I'm sorry, I'm old school. I still use the telephone. No chat bots here, right, waiting to harass you. I will answer the phone when you call. I look forward to speaking with you. So make sure you join the mailing list. Grab those charts. Leave me a comment, will you? Right? Let me know what you like about that, right? Let me know what you enjoy about the newsletter. That way I can keep doing more of it. Or any other topics, right, you want to see me cover in this nightly newsletter. I am always eager, right, to keep adding to our portfolio here on this YouTube channel. All right, enough of the chit chat. Let's break this in here tonight. Tomorrow's Wednesday, February the 6th. Now, before we talk about tomorrow, we got to talk about tonight, because tonight we got that State of the Union address. I would imagine this is probably why gold is so choppy, right? It does appear to be dead on arrival right now. It probably won't be like that all night, but I would imagine until we hear from President Trump here in the United States. Usually that State of the Union, he usually starts speaking about 8:30, 9 o'clock Eastern time, so all of us left coasters, right, can watch as well. So I would imagine, 8 o'clock, 8:30, 9 o'clock Eastern time is probably when we're going to hear from the President of the United States with the postponed, right, due to that government shutdown, that State of the Union address. Everybody's thinking he's talking about interest rates. Everybody's thinking he's talking about border wall. Everyone's thinking he's talking about all the good stuff. The trade talks between China and the U.S. Is he going to give us some nibbles, right, on those? I'm sure markets will react to that overnight. And then, of course, that leads me into tomorrow, right? Tomorrow, of course, being a Wednesday, right? Hump day. We got Wednesday tomorrow, the 6th. Now, there really isn't much on the schedule for tomorrow. So I would imagine it's going to be a lot of the reaction to whatever comes out of Trump's mouth here tonight. And really, there's only a couple news reports. You get the manufacturing reports coming out of Germany overnight, 2 o'clock Eastern time. It's not listed here as a big market mover, but it probably will be. Manufacturing, trade, all this stuff is definitely on everyone's radar right now. So definitely think, even though it's only a Green Star news report, that will probably get things moving for you guys if you're in Europe. International trade here at 8:30. I would love to say this is probably going to move things around tomorrow. It's got some potential, but let's be honest. In the U.S. session, we're getting the best trades right now between 9:30 and 11. Those were all the best trades are setting up right now. So I hope this news, sparks something going here tomorrow morning early. But lately, though, we've seen most of our trades coming after that 9:30 opening bell. And then speaking of after 9:30, if you're an oil trader for tomorrow, you got that weekly inventory report. I know, wah, wah, wah. I know it's not the best time of the week to be a crude trader. My cutoff on Wednesdays is always 10 o'clock Eastern time. That's 10 a.m. Eastern time ahead of that news report. Typically after 10 o'clock, it gets really slow, really low volume. This is oil we're talking about. None of the other markets, just oil. Obviously, throw natural gas in there if you're a crazy that likes to trade natty gas. But the bottom line, though, is 10 o'clock Eastern time is my cutoff, right, on oil trading on Wednesdays. I don't mess with the news. We're very fortunate, though, here at School of Trade to have a strategy that works on all the different markets. So if I can't trade oil after 10 o'clock tomorrow, we'll move to gold, euro, S&P, Nasdaq, right? We don't need to force trades during markets that are based on news, right? We have the luxury of being able to trade other markets with the same simple strategy, right? Speaking of that strategy, let's drop this thing. Let's do this. Let's see what this strategy looks like here for tomorrow. Had a great day today. Hope you guys did as well. We are pushing through the month of February. We're going to go crude, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. I've got 3 big clues for us tonight here on the oil. One is the bear momentum. First big clue is that bear momentum. Now, what does bear momentum tell me to do? It tells me to find levels of resistance so I can combine those levels of resistance with my 4 different entry patterns that we use in our trade room. Second clue is a trading range. Now, this one might be debatable, right? I wouldn't argue with you if you disagree with me on this, but it looks like this is a double bottom. You know, double bottoms in my world don't need to be perfect, by the way, guys. They can be a little bit higher. They can be a little bit lower. This looks like a double bottom, though. Big wicks down here, holding tight. This looks like a double bottom. Anytime I see a double bottom in a bear market, right, I know we have a range. And typically, the best trades are going to come right around the highest point after that double bottom, believe it or not. So anytime we see a double bottom in a bear market, keep your eyes, right? Keep your eyes on the, again, in a bear market, it would be the highest point in between those two. And we're going to grab a look at on the S&P and the Nasdaq because those have some double tops. And of course, it would be the opposite of that. So we definitely want to keep our eyes on that. In this case, it's 54.63. But again, anytime I see a double bottom in a bear market, no, it doesn't mean to buy. I know the old school trading books. I realize, gambling 101 says when you see a double bottom, you buy it. Not in a bear market. We don't buy a bear market. We sell a bear market, right? Let those other poor suckers try to buy this. We're going to be ready here to sell it and jam it right back down their throats here. So it's definitely a trading range. Definitely got that range. And of course, right, the range tells me look to sell above that trading range. We're going to put that plan together in just a moment here as well. And then you know me. I love me some hidden channels, right? Can't get enough of these little hidden channels. Some of the old school books would call these reverse channels or negative channels. A lot of people draw channels, and I was taught like this from reading all the popular books when I was a rookie as well. Most people will draw their channels by using resistance trend lines, right? And they'll draw channels like this. I'm not going to say that's the wrong way to do it, but in my experience, I found much better results by looking for resistance trend lines by actually drawing it off of support levels first. I know, right? Completely the opposite of what I thought was going to be necessary. It took me a long time to learn this, but one of the tricks I always teach my clients is if you want to find a good level of resistance to sell in a bear market, find some support. Trust me, right? Find some support trend lines and then bing, put that right up around those highs. And that creates what I kind of call a hidden, right? A hidden level of resistance. So put all these 3 clues together. We're bearish. I want to sell at resistance. I've got that trading range. Again, that double bottom tells me focus up around that 63. And then of course that hidden channel tells me we're right there, right? Up around the high of that channel. So now I know, right, this is the sweet spot for tomorrow. And let's put the plan together, right? What if price goes up? What if price goes down? What if price goes sideways here, right? How are we going to trade this strategy? Now remember, tomorrow, 10 o'clock Eastern time, we have that news out at 10:30. So we got to get to this stuff early. That's the only thing that always kind of is a bit of a drag, right? When it comes to this oil on Wednesdays, is it does tend to get a little bit sloppy around that 10 o'clock hour because of inventories. Other than that, though, we should be all set here for an early morning session. Now, what if price goes up? That's what I want, right? I want to bounce off this double bottom. I want to go up into that area, the highest point between the two, right? The two bottoms, and look for a sell there. So how can I sell up here? Well, look at this. We've already got a great example right here. Watch closely here. Watch what happens here. We go up once. We pull back to the moving average. We go up again. Now look, where do those buyers, right? These are buyers who bought that pullback. We see a sell right below that low. Now we go lower. Now what happens? It pulls back, and look what happens. It runs back from there. Okay, now look at that, right? Look at that structure. Okay, that structure happens over and over and over again. Ready? 1, we want to go up. Two, we want to get those buyers now to try to buy the pullback, right? Let them try to buy the pullback. It's a bear market, by the way. It's not likely that pullback's going to be successful. But if it is, I'm going to talk about that plan in a moment. So stay tuned on that, right? Let those buyers buy that pullback. Once those buyers are to buy, ooh, now I know exactly where your stops are, right? Now I know right where all of those counter trend, right? Can't stay patient, can't be disciplined, right? They had a plan and they ditched the plan. All those stops now are now sitting right below those lows. And this is exactly where my first opportunity to sell this thing is going to be. I call this a failure setup. It's called a 2-try failure. This would be 1 try. This would be 2 try. There's your failure. Okay, I call it a 2-try failure pattern, or a failure for short. That's the first one. Now, from here, I don't want to chase the market lower, because remember, when it comes to being bearish, we want to sell at resistance, right? I don't want to sell at support, right? Sell at resistance. Like I said earlier, where's resistance? Back to that prior swing, right? That's my next setup. So a beautiful combination now, right? Moving average will come over. And again, almost identical to what we saw previously, right? So you might have picked up on this by now about trading, right? What's happened in the past is likely going to happen in the future. It may not be exactly the same, right? There'll be some variations to that, but we're going to walk that through together, right, in our trade room. So a failure, right? A failure into a pullback. Now, here's one more pattern that I want you to think about. Let's use this example again back here, right? We go down, up, down, up. Now, what could I do with that? I could draw a trend line off of that low, and then look what happens, right? It pulls back below it, whoop, and right back down again. That's another pattern. We should talk about this more than, oh, you're right, we do. Never mind. We cover this every night. Never mind, right? I almost forgot about that for a second, right? 1, pull back, 2. Okay, now, this is much different than just a straight up, right? So that's the big difference, right? It's up, down, up. Now, draw that trend line over. Now, use that trend line, whoop, right, and back down. We call these, right, my nickname for it is a 2LP. It's a 2-legged pullback. It's 1 leg, it's 2 legs. Okay, 1 leg, 2 leg. Then we'll sell it off that. Now, could this be set up as a combination, right? 2-legged pullback into a failure, into a pullback? Hell yeah, right? Double hell yeah, right? That's a great combination right there. Okay, so 2-legged pullback, failure pattern, and into that breakout pullback. All I'm doing is I'm trying to sell into those buyers who are trying to reverse this trend. Now, want to learn more? Want to learn more of my favorite patterns? How about all the ways I draw trend lines, right? Like I said, if you want to find a good resistance level, start by looking for support levels first, right? I'm going to give you a great free trading class, teach you a lot more of these great tricks, right? I want to give you a deeper dive into the same strategy that I use every day in our trade room. Grab that link in the upper right-hand corner, or if you're on the blog right now, there's a big red button right at the blog below the video tonight on sidewaysmarkets.com. Grab that big red button. Get registered. That's okay. I'll be here when you come back. This video, just pause it. We can make up for lost time when you come back. But make sure you grab that free trading course, because that's going to give you a behind-the-scenes look at what it feels like to be in our trade room, all the strategy, and everything in between. Now, what if we go lower here, right? Because let's be honest, right? We've got that low, right? We might end up back at that 53.29 here, right? How do we go lower here right now? What would the plan be if we go lower? If we go lower, not much changes here, right? If we go lower, I still don't want to sell low. I still want to sell high. The only difference now is well, we'll continue here to find that hidden channel, and we're still going to wait for that up, that failure, that pullback, and that back down. So promise me, if we go lower, you're not going to throw this plan out of the window, right? And then jump into whatever, right, goes lower. So if it goes lower, wait for it. Now, how do we reverse, right? We talked about this earlier. What if we go up, we pull back, and we jump off of that high? What does that do? That reverses the trend. Now, it's very, very important that you don't chase after that move, because the objective is going to be back at that 22. So what I'm going to do is I'm going to mark up that high, right? I'll toss in that one as well. Okay, that creates a reversal line. I'm also going to mark up that high. Remember, if you want to find a good level of support, look for resistance first, then I'll bring it down, and that creates a sweet spot right there, and I could buy, again, using that failure into pullback combination right off of the low of that channel. Guys, we're going to break this all down tomorrow morning, 8 o'clock Eastern time, so make sure you're there with me. How about some S&P? And again, 10 o'clock tomorrow on that oil. How about some S&P here? What are you thinking, Emini? Okay, measured move, got that. Let's get that out of here. That way you guys aren't being distracted by that. Okay, I've got, I've got 4. There you go. 4. Apparently my math was a little off. Luckily, I'm not teaching you the mathematics, right? 4. I got 4 big clues on this S&P tonight. I missed that one earlier. All right. Worst one is bull momentum, right? Nice, big, strong bull momentum here. Yeah, quite strong day today. It cooled off towards the end of the day, but I mean, nothing runs that hot and heavy right that long. So definitely a bull momentum right now. What does a bullish momentum tell me to do? Find levels of support. Find levels of support. That brings me now to my second clue, right? A trading range. Now, how do I know this is a range? Well, because anytime I see a double top in a bull market, right? Anytime we see a double top in a bull market, I'm going to mark up that top, and that's usually going to the top of that trading range. Now, remember, right? The difference between the two, one top, pull back, 2 tops, pull back, oftentimes the best trades will come right around the deepest part, right, of that pullback. Now, this one might be a little bit shallower because, right, you've got this rising support trend line here, and that trend line may be enough to keep this from really going back all the way. Remember, anytime you see a double top in a bull market, it's called a range. Right? Find the range and keep your eyes on the deepest part of that pullback between the 2 tops, because those are always going to be, right? Those are always going to be great support levels to buy going back up. And then what else do we have here? The third clue, right, is that spike in channel. Now, there's a spike in channel hidden inside here. You really got to look closely on it, but there's your spike in channel. Now, wait a second. We just did a full lesson on how to trade spikes, right? Strong runaway trends. What I'm going to do is I'm going to put a link right up top here. I'm going to link up top. Let me mark this in the video right now, right? I'm going to put a link up top here, right? And that will direct you towards that lesson that we did. I think it was last week, right? On those strong spikes. But the bottom line is, anytime you see a spike in channel, anytime we see a spike up and then into that channel, what happens is price will pull back to the base of that channel. It's like clockwork. It's always amazing how well this. So it's always amazing how this works. It's almost every time. One, and of course, look for the entry off of that. So find that, right? Find the base of that channel, right? Where's the base of that? Oh, it's right there, right? So there's the base off the highs. Again, I draw resistance level first, right? Then I use that to find support. Lines up nicely there. Find the base of that, right? Find the base of that channel right there. Now, wait a second. That leads me now to my fourth clue. Let's just call it 3.5, right? Let's just call it 3.5. It's not a very big clue. It's just a gap, right? I mean, let's call that, we'll call that 3.5 clues here. Next time I'll be more prepared for this, guys. I apologize. I will do better next time, I promise, right? So our 3.5 clue, right, or our fourth clue is going to be that gap, right? That gap. Now, gaps are really interesting because, a lot of rookies get wrapped up in gaps because, 80% of gaps get filled. But the problem is we don't know when they get filled, so it's very misleading. The most important thing about a gap is that it doesn't allow anybody to get in at that price level. Imagine, what's a good example? Imagine you're at the airport, right? You're waiting to get picked up for the people moving to take you to the rental car, right? And there's this big line of people waiting on the sidewalk and nobody's picking them up. What's going to happen? Eventually, one of those big caravans, right, will come over and pick up that group of people. So imagine there's a big group of people right now sitting down here going, hello, I bought my ticket. My flight's going to leave without me, right? I'm waiting, right? Those kind of look like Super Bowl trophies, actually. Never mind. But the bottom line, though, is that, right, that gap, right? Look at it, right? right there, a little gap right there. Right? Now, how do I qualify a gap? A gap is a difference between the closing price of one candle and the opening price on another candle. What does that mean? Explosiveness, right? Explosiveness. It's probably explosive because you can see the sellers try to sell off that moving average, classic failure, and it runs back up into a pullback, right? Pretty much typical we talk about every night on this newsletter. The bottom line, though, is that gap, right? There's a bunch of Super Bowl rings, right? Bunch of Lombardi trophies hanging out down there. No, there's a bunch of people hanging out down there right now that are trying to get into this market. And boy, when you combine the deepest part of that channel with that gap, you toss on the fact that it's a range. I could take that trading range, copy and paste that range down. You'll learn more of these tricks, right, in that free trading course, by the way, that I mentioned earlier, right? You'll grab that free trading course in the upper right-hand corner, right? Combine that with support at 27.25 and then throw in that trend line there, right? That is a great looking spot to be a buyer. So how do we get down on this? Right? What are we thinking right now? Well, you can probably already see the pattern setting up right now. Do you see that? You see what I see? 1, 2 lower. Let's draw that trend line down. Absolutely. And we're going to look for that two-legged pullback. Now, remember, that two-legged pullback now will set up here for that failure, right? That failure sets up into that pullback. And then as we go higher, what's another pattern we could look for? How about a trap? Right? How about a trap below that low, right? There's a pattern we haven't talked about yet here tonight. Okay, so follow the bouncing ball here, right? So now as we go pulling back, I know where my levels of support are. Where can I get in on this? Okay, draw the trend line down. Shave off those wicks, right? I'll teach you more of those tricks in the free course, right? Shave off the wicks. 1, 2, looking for 1, 2. Now, once I get that two-legged pullback off that low, again, we're filling the gap. We're going back towards the deepest part of the two double tops here, right? That's the trick. And then, of course, now we look for failure, right? So moving average comes over. Failure into strength. Strength into pullback. And then we don't want to buy high up here. So what do? We look for a little trap, right? A little trap low below that low, right? It's a 2LP, it's a failure, it's a pullback, it's a trap, right? It's a 2LP, two-legged pullback, right? It's a failure setup. This is the same thing that's talked about, right? It's a pullback setup, and I'm running out of space here, right? That last one is a trap, right? Traps, of course, because I don't want to buy into the high, right? I don't want to buy into that high. I'm going to buy low, buy with a trap low. I'll tell you, trap patterns are one of the most effective patterns when you don't have a lot of open space to trade with. And so as we go lower here, 1, 2, failure pullback, right? I don't want to buy into that high. So what do? Right? I look for a trap. Right? Look for a trap. Look for a little trap low. Get below that prior swing. It'll rope in those sellers and allow you to buy, right, nice and low at the same time. So bringing that trend line down right now. That trend line may end up being adjusted here in the overnight session. I'll keep you guys posted for this tomorrow morning in the trade room. Now, what if we don't pull back? Right? What if we don't pull back? What if we just start chopping around sideways? Then what do? Right? What if this thing never pulls back? We start chopping around, then what? Well, whenever we have a range-bound market, I like to use, right, take the size of that range, copy and paste it down. That creates a key level of support, and then we'll go 1, we'll go 2, and buy back up off that support. I call this a 2-try failure. It's a very similar but variation of that failure setup that we already talked about. Markets spend most of their time, boys and girls, inside of ranges. So it's important that you learn how to trade ranges, right? If you haven't noticed that yet, the markets are not strong trends very often. There's a little bit of trend and a lot of range. You got to learn how to trade ranges. We have a lot of videos on our YouTube channel about trading ranges. We also cover all the meat and potatoes inside of our free trading class, right? Which again, you can grab in the upper right-hand corner or grab that big red button below the video tonight on our blog. Now, how do we turn bearish? It's a bull market right now. How do we turn bearish? Will a strong move lower do it? No, because look what happened back here. That's a pretty strong move, isn't it? Yeah, it's a real strong move down. Did that reverse it? No. So what does it take to reverse the market? It takes a strong move, but then more importantly, it takes a pullback to the moving average and a jump off the moving average, right? If they would have jumped off that moving average down here, that'd be a reversal. Now, what if we get the reversal there? What is it called, by the way? It's called a 1, 2, 3 reversal. I'm pretty clever with those names, aren't I? 1, 2, 3 reversal. Yeah, I really hit on all cylinders on that little nickname for that one, right? 1, 2, 3, 1, 2, 3. The key is bam, right? Big, strong move coming off of that moving average. Mark up that low. Remember, mark the low first, then up to the high. Grab that high, and we can sell off of that high. That is what we call a hidden channel. Again, wait for the reversal before you go trying to sell this market short. If there's one thing we learn about this market, right, it is you do not want to try to sell into these bulls right now because they are red hot. Now, remember, we got the State of the Union tonight, 8:30, 9 o'clock Eastern time. So I'm not going to lie. I'm definitely going to have my laptop open here while he's talking tonight because I think we're going to probably see some pretty explosive moves here. As long as he doesn't dance around the important topics here, I hope we hear some about China. I really hope we hear. We may not, though. We may not, though. He may not be able to talk about anything about that agreement they're working on right now. So we have to wait for tomorrow. But more to come, though, on that for tomorrow. But some Nasdaq here. Keep it moving here, Joe. Keep it moving here. 3 big clues on the Nasdaq. One is bullish momentum. Again, very, very obvious. The market is bullish here. We clearly do not reverse the trend here. Again, strong move down. Nope, failure. Back up to retest the high. We get the retest the high. What is that? Double top, right? Double top. What does a double top tell me? It tells me 2 things, really. One, it tells me this is the top of a range. And it looks like this is the overall range. I could take that range, copy and paste it down. That creates a level of support at 76 1/4. But what else double top tell me? A double top also tells me to pay attention closely to the deepest point between the two. Because oftentimes that's where you're going to find your best entry going back up to retest the high. A lot of times a double top will tell you that's the range. But I don't think that's the range right now. I think the range looks more like this right now. Okay? So what if we go up? What if we go down? Oh, almost forgot, right? Second big clue, trend line. Trend line. Now, we don't normally find trend lines like this. A lot of times these trend lines are a lot steeper, so you really can't use them very much like this. But this trend line fits, it just fits like a glove. It really does. I'd love to use that trend line in combination with, right, the low of that double top. Right? Very, very simple spot there to find some support. And then, of course, okay, that's it. So we got 3 big clues. We got bullish Momo, we got trading range, and we got trend line. I think it's pretty clear. All signs point to, right, give me a full scoop of that 69.90, right, just below that 7,000. That really looks like a great spot, right, to be a buyer. Make it a double scoop, right? So how do we do this? Look like here. Let's go down, right? Remember, want to see it pull back. I want to see that moving average come over. I want to see sellers. Get this out of here, will you, Joe? Right? We go down. I want to see it pull back to that moving average. Right? At the moving average, show me sellers. Okay? You're going to see it. Big red candle, right? Big red candles. You'll see it. Now, guys, sometimes the failure does this, very shallow. Sometimes that failure does this, right? Very deep. There are some rules behind that, right? Different variations of the 2-try failure pattern. I cover a lot of the rules inside that free trading class, right? So grab that as well. I do hold back a little bit of the secrets for our clients in our trade room, right? But of course, looking at that failure off of that, right? Off of that pullback, 1 try, 2 try. Once we see that seller, right? Once we see those sellers come off the moving average, now we know where stops are. I can buy into those stops, right? That's the failure pattern. I can then look to buy that pullback, right? Pull back the moving average, pull back in. And then what's the next setup? Yeah, no, I don't want to buy high, right? I don't want to buy high. I don't want to buy into that high. What's next? Trap, 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 trap. There you go, right? Little trap pattern. So failure pattern, pullback pattern, trap pattern, right? Let them pull back. 1 try, 2 try, failure, right? Into pullback, into trap low, right? Traps usually come towards the end of that move. Why? Because you don't want to buy high, right? Into that trading range. What if we keep going sideways, guys? What's the plan if we keep going sideways? If we keep going sideways, not a lot changes. But now we're going to probably lose sight of that trend line, maybe, right? Maybe if it goes sideways here, maybe a strong move down, then nested 1, 2 up like that, right? If it really gets late and we see that big blast lower, the problem is that's going to be really, really bearish, right? So if this thing goes sideways here for a while, that trend line is going to get a little bit out of striking distance, right? If it does make a run lower and we get that trend line, I'm not going to say we can't buy it, but we got to wait for a different pattern. We got to wait for what we call the nested 2 try, the 1 and the 2, and then back up from there. And the reason for that is, and if you're a client of mine, you know what I'm talking about, momentum is too strong, right? I don't want to buy into that much momentum, right? So if we get it now, right? If we get it now, yeah, I can do that now. But if this happens later on in the process, yeah, that momentum is just too much. 1, 2, and then back up from there. There'll be a rising trend line coming in to give you some support, right? Off of that low, going back higher again. What if we keep going higher, right? What's the plan here? What's the plan? I mean, if we got that measured move, the measured move is just taunting these bulls right now. Maybe Trump says something crazy and the market explodes higher, right? How do we trade it? It's probably going to end up being a spike in channel. 1, 2, 3, right? Probably be a spike in channel. Mark up that high, mark up the channel, and then we're buying pullbacks. So what I always do is, if we're in a range, I wait for a real strong breakout of that range. I don't try to predict breakouts. I fade breakouts, right? So if we blast higher here, I'll gladly be a buyer up here, but I'm not going to buy too quickly. I'm going to wait to buy once we see some structure up here. It's very tempting to just jump in because you don't want to miss it. But as we talked about last night, the fear of missing out, right, is really one of the biggest killers for most new traders, right? Chasing after markets, not being disciplined, right? To sit back, relax, wait for the structure, wait for you and the rest of the market to know what they're working with. Then you'll get much better results, right? As long as you're not chasing after those moves. And again, that's one of the biggest reasons why our trade room is such a great place to be every morning, because we walk each other through this, we hold each other accountable, right? And we always put the plan together first before we take those trades here, right? In the trade room. All right, speaking of the trade room, let's keep rolling, right? Let's keep rolling. What's gold looking like here for tomorrow? Okay. Yeah, there are 3 clues on this, but there's only one clue that really matters on this right now. Let's go over them all. You can probably already tell what the big clue is. No, it is not the ugly stick. I realize this thing definitely fell out of the ugly tree and hit every branch on the way down right now, and it does look like it needs a toe tag at the morgue. It looks pretty darn quiet here right now. There are 3 big clues though. You got the bullish momentum. Are we? Yeah, I mean, we're a little bit bullish. I mean, we are seeing, yeah, I mean, we're seeing higher lows, we're seeing higher highs. It ain't pretty, but we're a little bit bullish. That's one part. That's one part of the clue. The other part of the clue is this nasty trading range right here. Now, you might be wondering, how did I know that was the range? Because if you go up, down, up, down, up, down, up, down, up, down, right? Where's the overlap? It's all right there, right? That's the only thing that makes sense. It might be a bit wider, but if you draw it wider, you're missing out on those guys right there. So that's the range. I want to stay the heck away from that range. Stay out of that area. I want nothing to do with that little mini, micro trading range. And then of course, the big clue here is this channel, right? The channel tells me one very big clue, and that is it's almost flat. Now, see, here's why I look at channels. And channels are such an important part of what we do every day in our trade room. When I have a very steep, narrow channel, okay, 45 degrees, it's not very wide, it's a relatively steep channel. When we have a relatively steep 45 degrees or more, right, 45 degrees, right, lower left, upper right, that's 45 degrees, okay, so 45 degrees or more, relatively narrow. There's only one person that can play in that channel, and that is a buyer, right? You can't make any money as a seller in that channel. You can't, right? You can try to sell high, but you're going to get bombarded by buyers coming right back in again. Very difficult to make money in a steep, narrow channel if you're trying to go against a trend. But now, let's say that channel's almost flat and it's wide. Now think about this, right? You can actually make money with a flat channel like this on both sides of the market. Look, right? I can put a sell order right there. Put my sell order right there. I wait for the market to come up, and yeah, it's probably going to rotate back down again, right? I've got a little bit of profit in there, right? I can make money as the market goes lower. Well, then the buyers come in, right? The buyers buy it back up. And what happens? The sellers are waiting up here. Okay? Now, what does that really mean? Okay? This is all fine and dandy in theory, but what does it mean for real, like real stuff trading? What does it mean? It means you've got to buy as low as possible because you're competing against the sellers. Think of a flat channel just like another very common pattern, a range. Right? A trading range and an almost flat channel are almost the exact same thing. You want to buy low and sell high. So when I see this channel, this pathetic excuse of a channel, and I know that Trump's speaking later tonight, I know this channel may get blown out. I'm going to talk about that in a moment here. But the one thing this channel tells me is it's almost like a range. It is pretty much a range. And what does the range tell me? Buy low. I want to buy low because that's where sellers are not going to be. I don't want to try buying high. So whenever I see an almost flat channel like this, right? As you can see, double bottoms, right? Double tops. Anytime I see an almost flat channel, I know I'm going to buy really low, or if it was a bear channel, sell really high, because that's going to be the only place for me to kind of get some protection against the other side of the market. Again, if this trend was straight up right now, I wouldn't have to worry about this because there would be nobody on the other side of the market to worry about. Right? But because it's almost flat, we do need to trade this almost like a range. So we know where the basic range is. We know where that range is. How do we trade it now? You can now see why my battle zone is so far down here. Because now the best way to trade this is anytime we see a range, in this case, an almost flat channel, I want to buy with that 2-try failure. 1 try, 2 try, and then back up. It's very important that we don't try to buy the first try because the first try is almost always going to be a failure. It'll look a lot like this one right there. 1 try, 2 try, back up. And I don't want to buy it right there. It's too tight, right? I want to go 1, pull back to the moving average, 2, and then once we get the proper signal, then we'll go buying right back up into that trading range. Okay, so that's the plan as price pulls back. What if we get stuck in the middle here? If we get stuck in the middle, nothing changes. 1, 2, back up we go. Now, how could I sell this market? Could I even sell this market? You can, as long as you don't sell this market as Trump is saying, blah, 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 right? And the market's torching higher, right? You can look to sell this market as long as I would say you could trade a breakout on this as long as Trump's not speaking, because what's probably going to happen is Trump will say something, people will take it the wrong way, and price will blast higher on gold because it sounds like the world is coming to an end, right? I can almost guarantee you the world's not coming to an end. The sun's probably going to rise tomorrow. The IRS will still want my paycheck, right? And the world will keep turning. But it may run, right? It may run depending on what he says. I find it hard to believe that Trump's going to say something's going to go like, oh, okay, I guess everything's cool now. I don't think that's going to happen. I've been around this planet long enough. I don't think it's going to happen tomorrow or tonight, right? I would imagine the only real reaction we're going to get here will be some sort of strong break higher, right, on this State of the Union. And no, that does not mean you should buy this market right now. If you want to buy this market, wait to buy low. Right? Because you buy now, your stop has to be way down here. It's a very big risk because you got to protect that pullback. So how would we sell it? Again, outside of the speech tonight, tomorrow morning, how do we sell it? We go up, look for that counter trend nested 2-try. 1, 2, back down we go. Now this one takes a little bit of practice because it's going to be real strong and you're going to go, man, how can I sell this right now? Wait for the 1. Wait for the 2, right? Buy once, buy twice. Once those buyers have that rope wrapped right around them, then we can sell back down right into that range again. And the objective will be going back down to that 13, right? 13, 18. Yeah, right. Okay, so that's the plan as the market goes higher. Now, at what point do we know this market is not coming back? Well, we call these 1, 2, 3 breakouts. Again, I really exceeded my expectations on the nicknames here, right? I know, 1, 2, 3 breakout. Would you believe me if I told you I hired one of those expensive firms here in downtown LA to brand me up? I'm kidding with you. 1, 2, 3. They really do have that. Could you imagine, right? Yeah, I paid $5,000 and all they came up with is 1, 2, 3 breakout. Are you kidding me? Anyways, 1, 2, 3 breakout. What that means is 1, strong move up, pull back to that moving average, or go. I would also take a move up and a hold off the high of that channel, right? That would be enough as well. But in other words, if we go up to the top of the channel, pull back, and then run, good enough for me. I'm going to mark up that high. I'm going to mark up that channel and looking to buy that pullback. These channels oftentimes move very quickly, so be on the lookout. Once that thing breaks up, right? What you're doing is you're measuring off of those two highs. So it gets a little bit tricky because it's fast, right? It's fast. These are not slow breakouts, right? They're fast. The key though is you don't want to chase after it, because if you chase after the market, your stop has to be enormous, and it really messes with your risk reward ratio, right? You can't buy high with a tight stop. You've got to buy high with a stop where it's supposed to be, right? Below a prior swing, below a low, where the trade breaks down. That's a lot of risk if you buy high, right? If I wait to buy low now, I can take a whole lot less risk for all the upside, because I can structure this around a pattern. I can structure my risk around the entry pattern. We'll talk more about structuring risk inside that free trading course. And of course, we go over it every day in our trade room as well, right? But I talk a lot about risk management. I talk a lot about doing things the right way in that free course. You can grab those links either below the video, right, or over on, right, in the upper right-hand corner. And again, same thing true, right? 1, 2, 3. We break out lower, right? So 1, 2, 3, break lower, mark up the new channel. You got it now, right? You got it. And we're selling off the top of that, right, of that channel. Relatively easy. Be careful on gold, especially around that speech tonight, right? I'm telling you right now, and I know I was joking around about it earlier, but be very careful, right, trading around speeches like that, especially on gold. I know you can make a lot of money in a short period of time, but I'm telling you right now, though, you take one couple $1,000 hit on a news event, and you won't be doing that ever again. Trust me on that. The money's not worth it if it's a loaded rifle in your top. You know, that's what I always tell my clients. You know, trading news events, it's great while you're making money, but I always think about, you know, trading news events like a loaded gun right on your desk. It's going to go off at any time and kill your career, right? That's not the way you want to run your career. I did a lot of that when I was a rookie, and I lost everything in my account twice before I finally learned that lesson. You can make a bunch of money trading news, but again, it's like having a loaded gun right on your desktop that can just go off all of a sudden and kill your career, right? And that's the danger of trading news. Whatever money you make is so susceptible to that, bam, right? And all of a sudden you're gone, right? I hate to use the analogy, but I hope that resonates with you, because that's what I tell my clients. I'm going to tell it to you as well. Okay, last but not least, big five, wrapping up tonight on the euro. 3 big clues. One is that bear momentum, pulling the old Humpty Dumpty on the way down, right? Just rolling over, right? Bear market tells me sell at resistance. Where could I find some levels of resistance? Well, the next clue is a spike in channel here. Again, I'm drawing off of these lows to find the highs. I did not draw this off the highs first. I do this off the low first, right? Find those lows, bring those lows up to those highs. That's resistance. But wait a second though. We talked about this earlier, right? Spike in channel pattern. Yeah, bingo. That is the base of that channel. So that's ultimately now where I want to be looking, right, for that sell, right? That's where I want to be looking for that sell there, up around the base of that channel. And that leads me into the third clue, which is the reversal line, right? Now, remember, we talk about these a lot on the newsletter. Big move down, big bounce up, right? That creates a level of support. That support now can be used as resistance. Now, I know what you're thinking right now. Wait a second. Didn't they pull back right there? They did, but remember, that's usually not the one that really works the best. It's usually we go through it, up, and then over, right? So what usually happens is we usually do get a little bit of breakout pullback there, but as you probably have noticed since I mentioned it, right, we usually come through and use it one more time. There usually is that sense of like, oops, go back and pick everybody up and drop it back down again. Right, so that's the idea we're looking for here, right, on that reversal line up around that 14,800. So at this point, it's a lot of the same stuff we've talked about here already, right? I'm looking to go up, right? I want to get up into that level of resistance. I want to see these buyers now try to buy that pullback off the moving average. What do we call that again, guys? The 1, right? The 2 try failure. Then what do? We look to sell into those stops. We don't want to go and sell low here, right? We'll sell high into those stops. Then we'll look for that pullback. Usually that pullback comes right around the same spot there. It's amazing. That's why you don't want to move that stop down too early. We'll talk about trade management tomorrow morning in the trade room. But one of the key things, though, is you don't move that stop down too early because it's going to come right back and bounce you out. Right? I always like to leave that stop back a little bit, let it come back, grab another portion of the position, right, and finish off that move back down, right, to retest that high, that low, excuse me. Another thing you want to look for here would be a two-legged pullback. 1, 2, draw that trend line up. You got it. Now we up and over, right? And again, that could also lead into that failure, right, into that pullback and back down again. Same basic patterns. And again, you're going to see lots more of those patterns in that free course in the upper right-hand corner. And then again, with that big red button tonight below that video, you'll learn a whole lot more about those patterns. You'll see hundreds of examples of real patterns from our trade room. I really like that reversal line area there. So I want to get up, failure, right, and back down. Now, what if we keep going sideways down here, guys? Right? What if we keep going sideways here? Then what do? Not much changes. We're still going to sell high. 1, 2, back down, right? Let them try once. Let them try twice. Let them try twice, right? Then sell it back down. Then sell it back down. You don't want to try the first one because a lot of times that first breakout's pretty strong, and with that momentum, the buyers will try it again. So you don't want to try the first one. You want to wait for those buyers to take the bait, right? Get that hook. All Lars in their gills, right? Get that hook all set and then sell right into those stops, right? That's what you want. Now, how do we turn bullish? What would a bull market look like? Strong move, right? Strong move. Pull back to the moving average, and then what? Yep, strong move off. Now, this is not drawn to scale. This could happen a little bit lower. It could be a little bit higher, but it's got to hold that pullback. You know, a good example right here. This was a bull market earlier. And then look, we get 1, 2, 3. We're bearish right there. Right? That's what I would call it, a bear market. Then what do? Right? Once you got that bear market in play, what do? You mark up that low, right? You mark up that channel. And, these actually, wait a second. These actually do work. Yeah. Okay. So look for that, but in the opposite direction, right? I'm kidding with you, obviously. But again, if we go 1, 2, 3, you can see examples of these all over the place. Mark the low, mark the high. I'm not going to worry about that trend line, though, if we do get a reversal, right? Momentum's not going to care about that trend line, and we'll look to buy off of that, right, off of that low. Again, this is not drawn to scale. It could be higher. It could be lower, right? Heck, we might even see a 1, 2, 3, and then we might be using that trend line, right? Might be using that trend line as a short-term target for all I know, right? That could easily turn that quickly here. Again, State of the Union tonight. Careful while he's speaking on this stuff. Currencies, metals are definitely going to be something. And then, of course, tomorrow, right? It's pretty much wide open tomorrow, except for all you oil, right? All you oil crazies out there. 10 o'clock Eastern is that cutoff tomorrow for all the oil traders. How'd we do? Did you love it? Did you hate it? Give me some feedback in the comments section below. Make sure you subscribe to our channel. And don't forget, I've got a free pass for you if you want to come out and join me as a guest in the trade room and really get a hands-on of how this strategy works. Grab the free trial. It's right there on the homepage at schooloftrade.com. Check out our 3 levels of membership, right? Use that live support tool if you have any questions. And hit me up. Call that toll-free phone number if you have any questions, right? I am always here to help. I'm looking forward to tomorrow, though. Big day tomorrow. Big day tomorrow. Tomorrow's going to be a big day in the markets. I can feel it. Will I see you there with me? 8 o'clock Eastern time. As always, we'll see you guys tomorrow morning. If not, same time, same place tomorrow night for the next edition of this nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? Stay warm, stay dry, right? And stay hungry. We'll see you guys tomorrow morning. Adios, amigos. Bye-bye for now.